Let's have a look at our raw material usage report. This report forms part of a few other crucial reports worth analyzing once you have completed a stock entry. We have compiled a list of key reports within our reporting playlist. Be sure to check them out when hunting for errors and troubleshooting your income statement results. Now, let's continue to break down our raw material usage report. This report breaks down into 3 reports. When clicking Reports, select Raw Material Usage and select the applicable stock entry dates. The system might take a few minutes to load all the data as these reports hold extensive detail when it comes to stock analysis. These reports are also reliant on your RM and PLU costings. It is crucial that these are in place and accurate for the report to reflect accurate totals. If your store uses the production function, you could swap raw material costings for production input instead. However, that would be store dependent. The benefit of using production would be more accurate results, as you can input exactly what was used daily or adjust the recipe if less was used. Stores that don't use production will need to complete the raw material costings. PLU costings, however, is a non-negotiable and needs to be completed in full for best results. Let's kick off with the audit report. Select Audit. Once the report loads, we can see here the following column breakdown: the stock item and its unit of measure, and then we have 2 blocks here, the unit cost changes and the quantity reconciliation. The first block breaks down any changes within the item's unit cost from opening stock entry to closing stock entry. We can see the cost from our opening entry, the quantity counted, and the rand value. Then we have the closing entry unit cost with quantity counted and rand value. Lastly, in this block we see any changes between these values and the percentage of change here. Next, we have our quantity recon block. We can see here our opening quantity, any stock movement from our daily controls, such as purchases, production, or issues done. Any stock purchased in at a negative total will deduct from here, and any production items created will increase the stock level. Alternatively, the ingredients used to create a stock item will deduct from this total. Bulk stock issued will deduct from this total, and portions created will increase this count. The theoretical sales quantity refers to a theoretical stock usage according to PLU sales taken multiplied by the PLU costings in place for that sale item. Then we have the closing entry count. Lastly, we have our quantity variance here. Take note, for the audit report alone, when seeing a negative value, you are over in stock, and when a positive value is seen, then you are under for that stock item. The quantity variance is calculated by taking the opening quantity plus the purchases, prod, and issues total, then deducting the theoretical sales total from that. This total should be your supposed closing quantity to end with. Once this total is calculated, we can take it and deduct the actual closing entry quantity from it, which will then leave us with the variance as seen here. Provided that all the costings are in place and daily controls are being executed accurately and consistently, this report is the best report to break down stock usage over a stock take period. Stock items like stationery, cleaning products, or packaging will always reflect variances as they are not costed into the PLU costings, since they are seen as expense items rather than stock affecting food cost. A usage rather than a variance will then be more applicable for these items. The second report that we can pull here is the summary report. This report reflects a theoretical food cost report versus your actual food cost according to costings in place. Once this loads, you can view the results as seen here or select print to view the PDF version. This report will only show direct cost categories. We see the categories here and then the purchases column followed by the actual food cost results. Our actual stock usage is taken from opening stock plus purchases minus closing stock. This column also includes the percentage of net turnover and our food cost percentage seen here. This is followed by the theoretical food cost. Again, theoretical referring to the PLU sales and PLU costings in place. We can see the sales contribution followed by what we should have used to justify sales and the calculated food cost here. Lastly, we have the difference column breaking down the actual versus calculated value and showing the percentage difference too. Lastly, we have our third raw material usage report that functions more like a summary of your audit report. This is the very first report you see with the item breakdown once you open the raw material usage report. You can view it as is or click print to view. It runs through the same details from the audit, but in a summarized version. We have the current unit cost, calculated stock quantity again, taken from PLU costings in place versus sales for that item, the calculated stock quantity sales total, and the actual stock quantity usage. Quantity difference will then be calculated here, and then the value seen here, followed by the GP percentage. If we return to our main window, we can also have a look at the individual item and the controls for that item broken down here in the bottom section of our screen. Once an item is selected, we can view the opening stock quantity, any stock produced, purchased, portion movement, or bulking including closing stock count. Our actual usage is then taken from opening quantity, all controls affecting the opening either adding or deducting from it, and then deducting the closing quantity to show the usage. That concludes our raw material usage reports. For more reporting tutorials, check out our reporting playlist. And if you found this video helpful, hit the like button and subscribe.